Hey, I'm Cindy Davidson with Keller Williams Realty and the Davidson team. Hope you're doing well today. I'm back here with Justin Messer from Supreme Lending, my favorite lender in town.
Thank you.
And I wanted to share some information with y'all and ask Justin a couple of questions that may help you as you proceed with buying and selling a home. Justin, one of the main questions I get when a person is thinking of selling and checking out loans, and then a buyer who has decided to buy a house, they're always worried about online lenders versus local lenders. And then second part of that is how many times can they have their credit checked and how will it hurt their credit score? So can you address both of those?
Absolutely, great questions. The credit score question is probably my most common question that I get at least 2 or 3 times a day. But let's start with the online lenders versus local. So what I always kind of tell everybody in a nutshell, there's really 3 different main types of lenders. We have our banks and credit unions, and I lump those together. We have your direct lenders like myself, and then you have like your mortgage brokers / maybe online lenders. Now there's a lot of companies that can do essentially just online lending, but the main ones that come up are like your Quickens and then through LendingTree and Bankrate and all those lenders. I always tell everyone to steer clear of them because you really lose all accountability.
Right.
You can't have someone you meet face to face, you can't shake hands with them, can't have someone that's going to sit there and explain everything to them. And a lot of times when you're doing online internet rate shopping, it's never ever what it seems. It looks great, you're going to get a great deal. Half the time it's more of a bait and switch where they say you're going to get 2%, but then they tell you later on this is going to cost you $10,000 extra on top of all your closing costs to obtain that.
That's right.
And then 2, they might not actually be a great lender. Who knows where they are, and they might send you to some other lending shop in Iowa or California, or you really have no idea. And end of the day, the most important thing is getting the loan done and getting the house closed, because end of the day, that's what you're trying to do is buy a house.
And they struggle with talking to a different person every step of the way. It's better for me, it's better for them, and they don't know it up front, but it's better for them to deal with one person locally who knows our properties, who knows our market, who knows our appraisers, in general, who takes much better care of you.
Completely. It's all of our job to make sure that the loan and the contract and everything is going to go nice and smooth.
That's right.
Get you to the closing table on time every time.
That's right.
So,
and then if they wanted to have their credit checked by 2 or 3 lenders, I don't recommend it, but I don't think it hurts as bad as they seem to think it does.
Everyone seems to think that if you have your credit pulled just one time, your scores are going to plummet and then you're not going to qualify for a loan anymore. Definitely not the case, but that's okay because everyone asks me that question. It's like, well, hold on, I don't want you to really look at my information or get pre-approved because I'm worried that if you run my credit score or my credit report that my scores are going to drop and I might not qualify. Not the case whatsoever.
That's really good news.
Very, very good news. So the actual rule, and this is a rule because the government has put this in place because they want you to shop. They want you to do your due diligence and talk to as many lenders as you can to make sure you're working with the right company, you're getting a good deal, getting a good rate, etc. So the rule is that when you run your credit score, you can actually run it as often as you like, and it counts as 0 inquiries for the first 30 days. So when you run that first one, you have 30-day window to run it as often as you like, and it counts as 0.
Wow.
After that 30 days, you have a 45-day rolling period where if you ran it 15 times, it's only going to count as 1 inquiry on your credit report. And even that just 1 inquiry, you're never going to know if it did anything. Odds are your scores could still go up because credit scores change every single day. Every time you make a payment, a purchase, pay a balance down, your balance goes up, it's going to change a little bit. So it really has 0 effect on your credit scores because it was meant to have 0 effect so that you can actually shop and make sure you're getting the best deal and rate.
And some of those online lenders that you see out there with really low interest rates, you have to truly check the fees they're charging you to get that rate. And if you want to call Justin or send over your paperwork from one of those lenders, he will compare rates for you and compare fees so that you will know the true story. One last question, Justin, is what is one thing you can tell buyers not to do once they've locked in their loan and they're 3 weeks from closing, those last 3 weeks of getting insurance and things like that, what is one main thing not to do?
Thing that I tell everybody, day one, not even if we're close to close, but day one, is do not go and buy a brand new car or run up your credit card balances, because a lot of those things don't show up for maybe a couple of weeks. And that can have a horrible impact on your financing and you getting approved. I mean, if you were to go out and buy some furniture that you just didn't think really mattered, well, you always want to ask me first. So I always tell everybody, if you want to do something, just ask. And most of the time, I'm saying, absolutely, you can afford a car, go get it. That's perfectly fine, but just ask, because there's really no way for you to know unless you talk to me. Because if your total obligations go up by $100, well, that might deny the loan, and then you might have sold your house, or you might have gotten out of an apartment, and then you have no place to live. So we just want to make sure that you're doing everything you need to be doing so that we can protect you and get you to closing on time.
We've all gotten to closings before where the buyer drives up in a new car and mentions it to the attorney at closing.
Mm-hmm.
Closing will stop right there until it goes back to the lender to approve that. So you don't want to lose your house over that car you just drove up in.
Absolutely.
Well, Justin, thank you for your time today.
Of course.
I appreciate the information, and we'll talk to you again soon.
Thanks so much, Cindy.
Bye, everybody.
See you later.